Welcome to the Inside Technician live trade presentation. The time is 7:15 Eastern Standard. That is 7:15 Eastern Standard on January 14th, 2013. Last night on the Nightly Market Intelligence Report, we had talked about several of these levels here at 1463.15, 1462.50, 1460.75, and 1456.25 is laid out by the dominant areas, the 15-minute chart. What we do have is very close to a double top here. These were the upper levels that I had laid out last night on the report here at about 1470.50 and right here at 1469 some change. Now, these levels, if they had found resistance, if prices had found resistance at these levels, could possibly turn around. The last injection of money flow ended here at this peak. If we draw it down to the secondary peak, we don't have an official negative divergence because of the differences here on the price levels, but we do have a solid divergence clearly laying out a path for downside movement because of the large disparity between these levels on the chicken money flow here. We had talked about this dump on a report as well, a substantial dump that had come in here. Now, let's take a look at some of the levels again. This is where we were last night when the report had terminated. This level right here is a key level because if we take this as determined by these most recent prices at 1467.75, we'll define that 100% to 75. And then we broadcast it out into the future. It'll be clear to see that this is the level that we wanted prices to trade through on a 15-minute bar to be able to, on a closing basis, as a high probability chart pattern, specific area to get in the trade to the short side. The overall bias, because of the superior resistance levels in the U.S. markets, is associated with the 15-minute charts. It leads to the overall bias call to the short side. Again, we spoke about that last night on the report. For the setup, here's that level on a 1-minute chart of 1467.75. And this is the volume that has come in here, a probe and then a final close here below this level. This is the area, the preferred entry, right here. The area to be crossed again was 1467.75. Therefore, 1467.50 is the in. $1467.50. Trading real time. let's look at the relative comparison of the volume. Well, in the 1 minute chart, the prices are peaking out. Now let's take a look at the gap from here to here, signifying weakness within the pattern itself. Prices trade down to the level that we're looking to get through to the downside for the preferred entry. Always looking for the optimum entry to start off with a winning trade right from the get-go. 1467.50 confirmed, all quiet environment. Last night, this is what we had drawn on the report. Trend line initiated here, connected to, again, this bar, broadcasted out into the future. Should clearly show a violation. Oh yes. At what level? The level that needed to be broken, providing us with an intersection between a horizontal and a sloping trend line, looking for the preferred entry. Again here, confirmation, difference in levels on the money flow. In this case, where we didn't have an official negative divergence, we do have an official negative divergence. Again, clear signal here on a trend line break. EMA cross back here at the 5:45 a.m. bar. MACD as well. In real time, the inside technician trade, MACD was signaling short, the visual change in trend on the 15-minute charts, right here. 6 a.m., again before the trade's taken. The approach on this end is to find, track, and trade the smart money. These are the people who do have the ability and do move prices from one level to another. This we know. And in this case, we look for the true high probability trades. When we not only have a correct chart pattern set up, we not only have multiple indicators, multiple time parameters in their preferred setups, we're really looking for the volume behind the trade to act as the catalyst to get in the trade, fade the move, and get out of the predetermined price profit target. Again, here the signal on the stochastic momentum before the trade is taken. Right here. $14.67 flat as we speak, trading down in the money. In this case, my preferred price profit target is the 14.6350 area. 3.5 points. Trading in real time. In the money on this trade. Excellent setup for a short move. Price continue to trade down. Equities should open and start to trade down immediately. Catch up with futures. Let's go back to the 1-minute chart and take a look. Here's the point. The preferred point of entry on a 15-minute chart here. Last night's nightly market intelligence report again ended at about this area right here. Gapping down, trading down. Excellent move in play. Here we are again. Phil came in at 1467.50 here. Volume behind the trade. $1,674 contracts traded at this area here before the close below the significant support level here at 1467.75. It's transferred over from the 15-minute chart. For those of you that have just come on line to this presentation, you are viewing a real-time S&P 500 E-mini trade taken by us at the Inside Technician following our smart money trading methodology. We have several predetermined laid out price profit targets. On a 1-minute chart, the 1466 area prices should find some support, and with more volume, continue to trade to the downside. I like to target here at 1464.25, and we will stay in this trade until the 15-minute indicators, as combined with the 1-minute charts, have told us any differently. $1463.50 here. On a price profit target. Possible incremental on the white getting hit. We'll extend that out to the right to see how prices react at that level. Very little resistance between 1466 and 1464.25. volume here before the trade was taken. In conjunction with the preferred indicator setups on the 15-minute chart, decided that this would be the trade that would be taken at this point right here. We're marked to the market, trading down, more volume coming in. $14.66. Hit on the low, a recent 1-minute bar right here. Let's see how prices react at this level. Trendline violation came here in the 15-minute chart on a 6:30 a.m. bar. Price highs here, lower high, indicator high, much lower indicator level as compared to this. Excellent setup on the 15-minute charts and the money flow index. EMA's crossed way back here again, 5:45 a.m. bar. MACD here, 6 a.m. $14.67.50 was the end after the cross of the significant support level at 14.6775. Prices continue to trade down. MACD indicator has some room to go. The disparity between the MACD and the signal line is wide, indicating the momentum is still in our favor. Short trade to the downside. The time is 7:34 Eastern Standard. Mark to the market is 14.6650 as we speak. Stochastics bottoming out. Little room to go here. Money flow. On the Chaikin side, low is hitting the 14.66 area. Let's take a look at the gap on the 15-minute chart here, real time, between 7:15 a.m. and the 7:30 a.m. 15-minute bar. Have a gap from here to here, from close to open, signaling clearer weakness in the pattern itself. for the continued momentum to the downside. After the point move from the entry to this level right here at 1466.50, the two lows hitting here in a 1-minute chart simply indicates that prices are moving sideways after the quick move down, stalling for a few minutes. Looking to gain some more momentum to the downside. A real-time trade by the inside technician. There we go. The 1466 level has now been traded through. We're waiting for this here. Would like to see some more volume come in at this point to act as the reason to get down to the preferred price profit target in real time. Another gap here in 15-minute chart, adding to the weakness within the chart pattern itself in the negative form. For the momentum that we need to the downside to drive these prices down to a clear-cut price profit target. Looking at the levels as laid out by the 15-minute chart from the past to act as our targets for the downside when prices turn right back around. We never, ever trade into uncharted territory. We are always measuring from the hard right edge, our current mark-to-the-market prices to the past. Inversely proportional from the past to the future. Clear cut levels for prices to get to on the downside when we have these types of setups. Early morning trade by the inside technician here. Time is 7:39 a.m. Eastern Standard. The real-time trading lab will be open, we expect, no later than the end of February 2013, providing the smart money bias trading calls to our subscribers in real time. We believe at this time, in this type of real-time webinar room trading environment, we will be up and running, broadcasting out live as this presentation is being recorded today from early AM until possibly an hour and a half after market opening on the equity side. And again, at late afternoon, 2:32, 4:30, 15 minutes after the E-mini market closes. These are all based off of Eastern Standard Times. Prices continue to move down, trading at 1466.50 mark to the market as we speak. You're looking at a 15-minute chart. This is a real-time trade taken by us. A demonstration of how to find, track, and trade the smart money. A methodology that I created over 16 years ago and have been trading with every single day. The E-mini market is our preferred vehicle here because of the opportunities, the liquidity, as you can see here, participation coming in from smart money to drive the prices through this level here that had been laid out on a 15-minute chart to take these trades in a manner that will allow us to pick up the larger profits in a shorter period of time. Hold times are important to us on this end. We do not want to hold trades any longer than we have to. We need the high probability trade setups in order to be in. Anything less generates substandard trading results. We believe that on this end here, our greatest positional advantage as traders is patience and waiting for these trades to come to us. Okay, we have traded below the level laid out at 1466 on a 1-minute chart, as determined by these prices right here. The reason why this level was chosen at 1466 is because here we have the divided difference between closes and opens, but this is really where our attention is focused here by these data points. Here and here and here, broadcasted out into the future, met by the divided difference of these prices and these prices broadcasted out into the future. On a 1-minute chart, price profit target is 1464.25. As we speak, prices are trading at 1466.25. Nice volume on the way down here. The gap between 522 and 523 AM bar signals weakness. The gaps on the 15-minute charts here and here put things in another perspective, indicating substantial weakness in this chart pattern, giving us the momentum that we need to the downside to sustain the trade, stay in the trade. The trend line violation, again, came here, connected here to here. We talked about this on last night's report. And here we are, one more time, in real time, taking this trade. To the downside. EMA's crossed way back here at the 5:45 AM bar. Disparity between the EMAs is wide. This is in our favor. Disparity between the MACD and the signal line is wide. This is in our favor. Early morning trade, 7:45 Eastern. On a short trade. Now, if we manage the trade, I want to see how the short-term money flow compares to the longer-term money flow. Check-in money flow would be our longer-term indicator, looking to see if this trend line gets violated and with what kind of strength, meaning movement to the upside. Money flow on a shorter term is still greatly in our favor. To the downside, let's take a look at the 15-minute chart here. 1, 2, Now it appears we have 3 gaps to the downside, adding to the conviction to stay in the trade until our price profit target is realized. On a 1-minute chart, that level is 1464.50. It is possible prices could get to 1463.50. Again, in here, 1467.50, right here in the 7:14 a.m. Eastern Standard Time bar. For those of you that would like to learn how to trade this market, we have an S&P 500 E-mini Elite Trader Training course that will cut you right through the chase on how to do this. You won't find anything like it on the web, any place, anywhere. And the reason is because most of the courses that are out there are not administered by real-life professional E-mini traders. They are educators, but they are not actual traders. Now, when we trade, we need to look over the shoulder of others who have pioneered the way before us, who have made this happen. I did this almost 20 years ago now. When I started out, I was calling people all over the world, interviewing traders, money managers who thought that in actuality they were interviewing me for a job. But at the end of the day, I was the one who was interviewing these people to get inside their head, to determine what is it that makes these people tick. What is it that makes these people successful? And they all had a common trait. The common trait was and still is central to my profile, that I would do whatever I had to do in order to make this happen for myself, that I would study harder, work harder, and exhaust every conceivable technique known to man at that time that others were using to trade, to come up with a superior methodology to live the life I wanted and not what life wanted to dish out to me. I knew this was for me. Now, what I had to go through in order to do this is something that most people would never do. The good news is it doesn't have to be that way for you. There is a proven path. I have taken a good part of it, taken the heat for your learning curve, I guess I could say. The belief here is that if you really know how to do something, if you really know how to do it, then in time, part of your responsibility is to figure out a way to give it back, empower other people's lives, give them the opportunity. All the opportunities, I shouldn't say all, but most have left. It's either an internet business and trading at the same time to learn how to manage the money that you make, or it's straight out trading. There really doesn't seem to be any in between. A lot of the retirement programs are folding. The money's going in the pockets. You have major investment firms going out of business. The volatility of the market up, down, back and forth, the buy and hold strategies don't work anymore, and they're not coming back. It's learning how to trade for a living that will give you the opportunity you need. Is it easy? No. Is it worth the stretch? Absolutely, positively it is. There's no better profession in the entire world. I'm passionate about this business, as people know who've studied with me. More volume coming in here. I like this a lot to get to our price profit target. Here we are, 1 minute chart, 1,086 contracts and rising. Incredible. Nothing like a lot of volume to stay in a trade. Okay, so quick review here for those of you who have just logged into this recorded presentation in at 1467.50 at 7:14 a.m. Eastern Standard Time. Because of the volume that came in here and a high probability trade setup on the 15-minute charts, let's take a look at what's happening here on the money flow index, our shorter term tracker of the insiders inside these prices here that most traders cannot see. We had a nice setup here. The relative comparison of the indicator levels as compared to the prices. Price is close to a double top here. The indicator level way down as compared to previous peak at around this level right here. Again, at 10:15 p.m. area. We have a nightly market intelligence report to get your feet wet on a 14-day trial. Subscription price is only $99 a month. We talk about the current state of the U.S. markets, which is any trader's primary goal, to understand where you stand every day in the U.S. markets. How to determine that is what we talk all about in a report. And it's broadcasted out 5 nights a week. We have ETFs that we track at this time that can be traded against the sectors that we present every night. And then we also have my favorite market, the E-minis. These trade demonstrations, in this case, this will be posted as a profitable real-time trade. We talked about this in last night's report. Last night's report, we were right here. This is where we ended. And we had talked about literally right here what the downside levels were, because the bias was to the downside because of all our conclusions. This level broadcasted out into the future became the level to be crossed to the downside. Here you are, 7:15 a.m. bar with volume, trade in progress to the downside. Here we are with volume that's on the 1 minute bar to close out at 2,653 contracts. That's a lot of contracts. It's 7:54 a.m. mark to the market. $30 contracts traded this morning. Any trade that we take here must have a 3-to-1 or greater risk to reward ratio. The trade is not taken without clear cut price profit targets laid out to get out at on a rally, clear cut entries, everything fully calculated out in advance with that risk to reward ratio in our favor. If we miss, if one of the elements is missing from the trade, we will not take the trade. Again, very obvious the volume here. 2,653 contracts traded at 7:52 a.m. 1 minute bar. Let's go back and take a look at the level at the 1464 bar. $14.64.25 on a rally. We have an all-quiet environment. We are trading real time. Current price, $14.66.25. Looking for the additional leg down here. Get to $14.64, get out on a rally, book the profit. 30 contracts traded. Concurrent gaps to the downside, adding to the conviction to stay in a trade. The inside technician by request will be opening up the real-time trading laboratory. We expect no later than the end of February, this room will be open. Early morning trading hours and late afternoon trading afternoon trading hours as well. Possible updates midday. These subscribers will have access to the room. The same type of presentation that you're seeing right now, myself broadcasting out. For those of you that can't attend the room, when the trading calls are made to enter the emails will be broadcasted out to all subscribers. On the high probability trade set up before the trade's taken, has a heads up. And then as we get closer, the actual entry point and exit on price profit targets, stops. Okay, we are now in the 8 a.m. Eastern Standard Time bar. Again, money flow index is still to the downside. Stochastic is just flattening out, starting to flatten out here. The check and money flow trend line that I drew here, that I broadcasted out into the future, has not been violated yet. What we do have is a level here that's just about hit here at 1465, but not on a 15-minute bar. So okay, it appears that this could be the bar. It could start to trade again to the downside. This is what we need. This is what we need right here. We're waiting for this close below this level here on the 8:01 a.m. bar. This is what we needed. Momentum is still in our favor on the 15-minute indicators. The spread on the MAs. Let's look at the spread on the MACD. Excellent. Excellent. Just starting to bottom out. Just starting to bottom out here. Little sideways movement here from Chaikin. Always looking at, continuously looking at the relationship between the 15-minute indicators, their current levels, the hard right edge is compared to the 1-minute chart. Here we are. More downward movement here. This is what we needed. The volume here, we expect at this point is additional selling. 2,653 contracts. The 7:52 a.m. Eastern Standard Time bar. Managing the trade. Looking to get out of the price profit target at 1464. Let's change that to 1464. Managing the trade to the downside. Looking to get to 1464. For those of you that have just signed in, you're looking at a real-time trade taken by myself here, Jeff Kilian, at the Inside Technician. In here at 7:14 a.m. Eastern Standard, 1467.50. Price closed below significant support level at 1467.75. 15-minute indicators all lined up in a high probability trade. Risk to reward ratio was greater than 3 to 1. Close stop. I do not leave. I do not put stops in when the orders are placed. I believe that these people have a way of knowing where my stops are, and if other traders such as myself have these stops in at the same levels, it is possible that these people can come and find these stops and take them out. Another advantage of the smart money trading methodology that I designed here is that we can keep a real close stop, as in this case, a point away, when we have a high probability set up to the downside with the volume pushing the prices through the support levels. because the likelihood of prices turning right back around and trading in the other direction are very thin. For those of you who are interested to learn how to trade this market, we have an excellent S&P 500 E-mini professional trader trading course available on the web, along with some documentation about that market. Will help you cut right through it and get right to business. There's nothing else like it on the web. We know this because we investigated to design something that was markedly different, that could cut right through it all and really learn how to trade this market. That begins with learning how to analyze, understand where you are every day in the U.S. markets, the trading levels that are laid out. You're looking at the Dow, the S&P 500 equities, and then the continuous contracts. Looking at all three, determining the current state of the overall U.S. markets and the levels gives you the confidence you need looking at the 15-minute charts as compared to the current levels on the daily charts to trade short or long with conviction. This volume that came in here, these three bars at the 749 for 1,744 here at 750 for 2,163 contracts. And again here for 2,653 contracts, we believe was a sell. Unless prices flatten out, the indicators flatten out and may start to trade up. We'll see. If that's the case, we'll be out of this and lock in a profit. 1465.50. Stochastics just flattening out here. Money flow just starting to turn up on Chaikin, breaking the trend line, signaling possibilities for a sell. Prices flatlining out. Money flow, short term, still to the downside. What we do not want to do is we do not want to give any money back here. If the price profit target is not hit, we'll get out with the profit, trading 30 contracts. Mark to the market at 1465.25. Chaikin. (8:10 a.m. Eastern Standard) on January 14th, 2013. Money flow index is still in our favor. EMAs are still in our favor. The MACD is still in our favor. Stochastics, momentum index is trying to flatten out, but has not yet. This is the fastest indicator on our end that we use in conjunction with 1-minute charts to get out of the trade if we need to. Checking money flow. Trend line has not been officially violated yet on a closing basis based off of the 15-minute charts. Here was the original trend line violation at the area we previously talked about to cross at 1467.75 providing us with an intersective trend lines at the precise area to be in the trade. On a 1 minute chart, the fact that these prices here at 801, 802, 83, 4, 5, 6, 7, these prices here are lower than these prices here would indicate that this volume had come in here on the 3 bars I mentioned earlier at 749, 750, and then again here at the 752 AM bar was a sell. Now we have some more downward movement closing through this level here on a 1 minute basis. This will be an excellent indication if prices continue to the downside that we can get to our preferred price profit target. Again at 1464. The yen target. Incremental level on the way down, see how prices react. Monitoring the 15-minute indicators on the way down. Looking at the overall momentum. We're still good. We're still good. We're still good. We are still good. I'd like to change in the shake and money flow again to the downside based off the 15-minute charts. Here we are. Again, this is where we were on the report last night, talking about a high probability setup to the downside because of all of our analysis combined, leading us to the conclusion that this would more than likely be what would happen. Trading is a game to some people. To a professional, it's a business. And this is the way it must be treated. We only want to trade when we have a true high probability setup in front of us. If we need to be busy, we can do other things. We can go to the gym and stay positive. We can read, educate ourselves, continue to study, keep it positive. But to trade for the sake of staying busy is a recipe for disaster. Heading down to the price profit target at 1464. The additional volume coming in now. Looking to get to 1464 even. The yen again at 1467.50. Right back here. 7:13 a.m. Excuse me, 7:14 a.m. This was the level. Prices needed to get through on the 15-minute chart, transferred over onto the 1 minute referred entry. Here we are, managing the trade to the downside. Nice hold time. Nice move. Real-time trade taken by myself here, Jeff Kilian, Chief Market Strategist for the Inside Technician. The time is 8:17 a.m. Eastern Standard. In the money, looking to get to 1464. Trading at 1465, mark to the market, looking to get to 1464. More volume coming in now. 8:18 a.m. bar, 1,081 contracts traded. Let's take a look at the 15-minute indicators. We may want to get out of this trade, book the profit. $14.65.25, 14.65. The up movement suggests possible stall. Hold time is long enough. Let's try 14.65. Okay, 14.65. Let me sit. We filled at 14.65. We exited the trade at 14.65 even. Confirming 14.65 even on the out. Confirming 14.67.50 on the in. Yeah, I have it. I have it. I got it. I know. Thank you. 2.5 on the move, less the spread. For half leaves 2 points. Another profitable trade taken by us here. The Inside Technician. Confirming 2-point move. S&P 500 mini futures. Hold that. $100 gain per contract. Confirmed. 30 contracts traded. It's a net gain on the trade of $3,000. The trade may move down again. But at this time, we've chosen to get out because of the movement on the 15-minute bar and in relationship between this level and a previous price level broadcasted out in the past. The sideways movement here on the prices, chewing up time time decay in the trade. Sufficient hold time. That's it for now. So this is one more real-time trade that you have just witnessed as taken by myself, Jeff Kilian, a Chief Market Strategist here at the Inside Technician. The trading lab will be open at the end of February. We have course material right now that's available to you on the web, the S&P 500 E-mini Professional Elite Trader Training course that'll cut you right through the chase at a fraction of the price that was charged to a worldwide audience in the most recent real-time presentation. That is a real-time course that was presented, again, to a worldwide audience shortly ago, recorded, now available to you. $3,000 profit on this trade. Booked. This morning before the open equity session. Thank you all for being with us. We'll see you again shortly on the next real-time trade. Jeff Kilian for the Inside Technician, signing off.